and now I am passing the floor to Barry Davys, who will continue about the financial insights.
Anna, thank you very much. And if, right, I'll just bring my screen up for you. Thank you, Dana, for the visa presentation. For my part, I'll be looking today at how tax is different in the UK from Spain. What do I need to do to be being aware of these differences? There are some things that need to be done before leaving the UK, others that are best and necessary to do after arriving in Spain. And then why is it essential to get some help when we become an expat in Spain? And then just how to get in contact if you want to follow up, because it's not possible to discuss your personal circumstances on the webinar at the moment. So if we could start with how is tax different in Spain than in the UK? Well, I think the first thing to say is that there are similarities. So we have an employment income tax approach, which is similar to the PAYE scheme in the UK. And perhaps unsurprisingly, we have inheritance tax in both countries. The things that are different is it starts with the tax year. The tax year is the calendar year in Spain, not from the 6th of April to the 5th of April as it is in the UK. And that makes a difference for things like reporting. If we have assets in both countries, you have different tax reporting dates, etc. That complicates it just a little bit. But it also is important to understand that any actions we take apply to the calendar year, not the tax year in Spain. Another difference is that in the UK, if we're only resident in the UK for part of the year, then they have a part tax year system in the UK, which we don't have in Spain. It's a full calendar year or nothing in Spain. Wealth tax, we have wealth tax in Spain on worldwide assets, and that's different because at the moment we don't have wealth tax in the UK. The income and capital gains from investments are taxed in a completely different tax code from the employment income that we have. Rental income is also considered to be earned income in Spain, and so is the pension income. So income from our pension is also taxed as income tax rather than the savings tax that comes from things like dividend income and capital gains. We have 17 different autonomous communities in Spain. These are different regions, and there's a comparison between the system in the US, where different states, we have state taxes and we have federal taxes. And even in the UK, we have the ability for the Scottish Parliament to raise taxes in Scotland, which are different than the UK. Same here happens with all the autonomous communities. And as a consequence, we have lots of different tax rates, allowances, etc. And so it's really important to know where you're looking to move to, which autonomous community you are going to, and get advice specifically about that community. A really big change, and this is one which people when they're receiving an inheritance in Spain don't necessarily appreciate, but inheritance tax in Spain is levied actually on the person who receives the inheritance, the beneficiary, not as in the UK on the estate of the person. And so that can lead to some planning opportunities. And because of a change of tax in the UK to a residency basis for inheritance tax, actually, for those of us who've been here for 10 years or more in Spain, it's actually providing a great deal of opportunities. It's going to take you 10 years to do your 10 years here, so I won't go through in detail at the moment, but just to say that there are inheritance tax planning opportunities which have arisen through this change of UK law. In Spain, we have inheritance tax between spouses, whereas in the UK, we have an interspousal allowance. I mention this one in particular because I've seen people come across and buy a house, joint names perhaps, not realize that there's inheritance tax between spouses. If one person passes away, then the other one actually has to pay inheritance tax on the amount, the value of the half that they receive from the deceased person. If you don't have enough funds to pay that inheritance tax, it becomes a problem. And so again, this is something we highlight quite early on and just trying to get the balance right for people, keeping cash available versus how much they pay for the house. The other one which comes up regularly is there is no tax-free cash lump sum from pensions as there are in the UK. So if we can move on one slide, please. Okay. The things that we need to be aware of coming from these differences starts with when you become tax resident. If we Google when am I a tax resident in Spain, you will see reference many, many times to the 183 days, but it's 183 days in a calendar year. That's the first thing. The second thing is that if from day one you make Spain your home, your main residence or a centre of economic interest, or, for example, if your spouse and minor children live across here before you come across, you will still be considered to be tax resident from that day. And I think it's important to say that there is a formal form to join the Spanish tax system, but to be considered tax resident, you only have to meet one of these criteria to become a de facto tax resident, even if you haven't completed the forms. Now, that means that some actions we need to take before we become tax resident in Spain, and others actions to be taken after we arrive in Spain, especially if we're actually moving from the UK. So could we have a look at those, please? Okay, the first thing is that because it's the calendar year and there's no part year in Spain, you should consider selling your main residence in the UK, your ISAs, and if you're over 57, taking your tax-free cash from your pension before you leave the UK. Now, at this point, I'll just mention the Beckham law that Anna mentioned is available with a number of the visas. The Beckham law actually provides a tax rate of 24% up to 600,000 euros per year income. But a really important part of the visa is that for investments and basically investment income and capital gains outside of Spain, whilst you're on this Beckham law, they are free from income tax and capital gains tax in Spain. So if you're coming to Spain and you are certain to get the Beckham law, then actually the selling it the calendar year beforehand becomes less important. But for the majority of people who come on the other types of visas, selling in the calendar year before you move to Spain is important. And I think it's best demonstrated by an example. And so if we look at a situation where, let's say you sell the house in the UK in January, but don't move to Spain until November. So you're not going to be in Spain for 183 days. But if you bought your house in Spain in November and you make that your main residence, you will have been tax resident in Spain for the whole calendar year. Now, the sale of your UK house in January will be assessed for capital gains tax on the gain from when the house was purchased to when you sold it. And if you all think of your individual situations, if you've had the house a few years, the gain can be quite substantial. And so this is an important part of what to do in terms of the preparation before you actually move to Spain. The same applies to ISAs and the tax-free cash from pensions. But if the ISAs were sold and you've taken the tax-free cash in the January in this example, and you've got your new main residence in November in Spain, the ISA sale will be assessable for capital gains tax, and the tax-free lump sum, all of it, is added to your employment income and will be taxed in accordance with income tax rates. So it's really important to specify that your individual circumstances will dictate what needs to happen before, and you need to get professional advice from Spain before deciding what actions to take. I'll just clarify that, if I may, that the actions need to be taken, sorry, the advice needs to be taken from Spain, not just from the UK, because if you take advice from the UK, you'll actually get a UK-centric degree of advice, but you're moving to Spain, and Spain will become your controlling tax authority. And so it's critical that you get advice from Spain as well, because it's the Spanish tax authority who are going to be making the assessment of whether or not you are a tax resident, whether your gains will actually count in that calendar year. So I'd just highlight that, and we can actually help out with getting that advice if that's required. When you get to Spain, the first and very simple thing, but again, it's something that we see people have difficulty with. If you come to Spain, you need to keep an emergency fund in a straightforward bank account that you can access, because you're going to have some known cost, for example, furnishing a house, but you're going to have some unexpected expenses as well. And I think just about all of us who've moved here have had things crop up that we didn't know we were going to have crop up when we moved. But it's important because often we see people overbuy on a house and then leave themselves short of the emergency fund. And this starts their time in Spain with a difficult situation. And if you get in a difficult situation, it's much more hard work to catch up and find yourself in a place where it's a more enjoyable experience. So another question that comes up regularly is, you do not have to move your pensions. People ask this all the time: do I have to move my UK pensions? No, you don't. And indeed, in many cases, your pension should be left in the UK. Now, again, I'll caveat that with your individual circumstances will be the deciding factor here, but in many cases, they should be left in the UK. And so how do we work things out here? Well, take financial advice as well as soon as possible after arrival in Spain from a professional and regulated advisor in Spain who deals with the international community. If we can get you on the right track to start off with, then you have a much more relaxed and enjoyable time in Spain. And so if we start with good advice from the very beginning for you, then it really does make a difference to your time in Spain. And so can we go on to the next slide, please? And well, the financial advisor is essential for an expat in Spain for a number of reasons, but including these. So if your financial advisor has years of experience in living in Spain, then they've gone through all of these processes themselves. We've gone through the paperwork. We have done it repeatedly. For myself, tax returns 18 years now here. And that experience just helps to guide you through exactly what's happening. The tax system in Spain, as in just about all the countries, it changes. And so you actually need not a Google search which comes up with a result which was posted on the internet even 12 months ago. You need to actually have up-to-date assistance with the Spanish tax system to get you on the right track to start off with. That includes for things like tax-efficient investments and also the pension situation here in Spain. And as just a very quick example, if you have investments where you're looking to take income from the investments, if you actually have a tax rate of 20% on the investment, then that's going to allow you to take less from your investment than if the tax rate is 40%. So making them tax efficient is important to make your money last when living in Spain. Liaising with local experts. When I moved to Spain, one of the first things I did was to have to help out somebody with an inheritance tax case. And so I vetted a number of tax lawyers and gestors, as we have here, and decided to go and ask for some guidance from one particular tax lawyer. In fact, as the person was from the UK, there was an interaction between UK inheritance tax and Spanish inheritance tax. And so he ended up mentoring me on the Spanish side. I ended up mentoring him on the UK side. And it's that type of local expertise, but also in cooperation from working together, that actually means that you get things done cheaper with lower fees because it takes less time to actually do. And it just makes, again, life very much more easy for you. At the Spectrum IFA Group, we have 7 different discretionary fund managers who provide investment insights to us. They don't always agree, which is great because it allows us to actually take a more critical look at the insights that we're getting. It's difficult to get anything like the sort of level of insight if we're relying on the newspapers, the TV, and the internet. So that expert insight is very worthwhile. We also provide stability during market turbulence. And so this is particularly apt at the moment. And we have a situation where share prices, some of them dropped 20, 30% with the announcement of tariffs. But actually, where we've had discussions with people and we've tied in the requirement for their funds to match their plans for the future, we've been able to help guide people through. And even just in a very short time, for the indices, etc., and a few shares that I keep on my phone, if I look at the weekly return, actually, some of the indices are up 6-7%. Gold today is up 1.35%. Now, if somebody is sold immediately after the tariffs were announced, you've lost all of that. You've actually definitely put in place the loss, and you can't replace that. You can reinvest, of course, but often it's better to actually just sit through some of these periods. And we help people decide when to take their investments and when to leave them where they are. And that's a type of transition itself, but we also support people during life transitions. And I think, again, the best way to explain this is, and to show you, is to give you 3 examples. So the first example was somebody moving from the UK across to Spain. It's a family, the husband and wife both had life insurance. The amount of cover in the event of death of either of them was £1 million on both policies. We sat down, we went through our process, and as part of that process, we went through their existing situation. But when I found these 2 life insurance policies, I checked that were they in trust, and no, they weren't. They probably should have been put in trust from the UK. And so I put together the paperwork for the clients, even though those were existing policies, put them in trust. And by so doing, we saved the family on each policy £400,000 in UK inheritance tax on each policy. Now, that's how we can help for, depending on circumstances, but with the transition of moving from Spain to the UK is just a simple example of one. Another example is, as Miriam mentioned right at the beginning, we use cash flow modeling system to allow people to get some insight to what their financial future looks like. And so as I sat with existing clients, we updated the cash flow model, produced the graph, and the wife said, Dave, that's an awful lot of money to leave the kids. So she said, why don't you retire? So Dave said, well, I said, well, would you like to see the impact on your graph? So I was able to set the income to zero from that day forward, in effect, retiring Dave. And yes, the graph changed, but the wife said, that's still a lot of money, Dave. And so Dave then said to me, okay, what happens if we double our expenditure? So I doubled the expenditure, again, fairly easy to do on the model. And it affected the graph again. And the wife then said, Dave, and he said, I know. He said, there's still a lot of money. He said, okay, I'll retire tomorrow. And that transition into retirement was facilitated because we could demonstrate that they were going to be in retirement, even if he took early retirement. And there was a clear method of actually demonstrating that to people. The third transition, which personally has been probably the most fulfilling for me, is a lady, 43 years married, husband had done her finances, all the finances for the family the entire time. He passed away. She was left more than worried, perhaps not an exaggeration to say terrified, that she didn't know where to start, what to do. A friend of hers is an existing client and said, look, go and speak to Barry. So we went through exactly the same process, built the cash flow model for her. Fortunately, her paperwork was in good order, so it's quite easy to do. And we went through, produced the graph and talked through the graph with her. And she looked at me and she said, I'm going to be okay, aren't I? And yes, she was going to be okay. And the worry, you could just see it drain out of her. And for me to be able to help that sort of situation was one of the most fulfilling things in terms of supporting the transition from being a married person to being widowed. So those are the sorts of things that we help with in terms of life's transitions. Can we go on to the next slide, please? Okay, so thank you very much, all of you. Here are my contact details. If you do wish to discuss personal details, you can contact me in one of these ways, including actually choosing a time that's convenient for you to actually book a call if you use the online system. And